Hello and welcome to this week's Financial Forensics Briefing, brought to you by AustinInvestigate.com. In today's episode, we'll cover key developments from March 16th to March 22nd, 2026, highlighting emerging trends in financial crime, enforcement actions, and investigative techniques shaping the global landscape, with a particular focus on risks related to publicly listed companies. We begin in the European Union, where regulators have intensified scrutiny on cross-border payment platforms. Beyond money laundering concerns, authorities are now examining how these systems may impact publicly listed fintech companies. Several firms have disclosed increased compliance costs and potential regulatory exposure in their latest filings, signaling to investors that transaction monitoring risks are becoming material. For forensic analysts, this is a reminder that financial crime exposure is increasingly reflected in public disclosures, particularly under risk factor sections. In the United States, federal prosecutors this week announced charges in a complex insider trading scheme involving encrypted messaging apps and decentralized finance channels. Notably, some of the trades involved securities of publicly listed tech companies, raising questions about market integrity and disclosure timing. Investigators are focusing not only on the perpetrators, but also on whether internal controls within these listed companies were sufficient to prevent information leakage. This case highlights the growing overlap between cybersecurity, insider risk, and financial forensics in public markets. Turning to Asia, regulators in Singapore and Hong Kong have launched coordinated investigations into a network of shell companies linked to trade-based money laundering. What's particularly relevant for investors is that several of these entities appear to have indirect ties to suppliers of publicly listed manufacturing firms. This introduces potential supply chain risk disclosures and reputational concerns, especially where due diligence processes may have failed to identify red flags in counterparties. Another key development this week involves earnings restatements among a small group of mid-cap listed companies. Preliminary analysis suggests that irregular revenue recognition practices may have been used to mask liquidity issues. While not all cases point to deliberate fraud, the involvement of forensic accountants indicates heightened regulatory attention. For investors and analysts, these restatements are critical signals, often preceding deeper investigations or enforcement actions. On the sanctions front, multinational publicly listed corporations are facing increasing scrutiny over indirect exposure to sanctioned entities via third-party intermediaries. This has led to enhanced disclosure expectations, particularly in annual and quarterly reports. Regulators are emphasizing the importance of look-through due diligence, meaning companies must assess not only their direct counterparties, but also the broader network in which they operate. From a technology perspective, new forensic analytics tools leveraging machine learning are being adopted by audit committees of listed companies to strengthen internal controls. These tools can identify anomalies in financial reporting and transaction flows, supporting early detection of irregularities. However, they also raise governance questions, especially regarding auditability, transparency, and reliance on automated decision-making in financial reporting environments. Finally, enforcement trends this week show increased cooperation between securities regulators and financial intelligence units globally. This is particularly relevant for cross-listed companies, which may now face simultaneous investigations in multiple jurisdictions. As a result, disclosure obligations are becoming more complex, requiring careful coordination between legal, compliance, and investor relations teams. To sum up, this week's developments highlight three key themes: the rising materiality of financial crime risks in public company disclosures, the intersection of insider threats and market integrity, and the growing importance of supply chain and third-party due diligence. That's all for this week's Financial Forensics Update. For deeper analysis, tools, and Austin insights, visit AustinInvestigate.com. Thanks for listening, and stay vigilant.